Hello traders, welcome back to Nova channel and let's continue another interesting topic today. The market has two states. One is calm, the other is explosive. And the professional traders knows exactly how to identify when the market is about to shift from one state to the other. Today, we're going to explore a powerful tool that helps you do just that, Bollinger Bands. It will show you when the market is dormant and once it's about to wake up so you can catch a big wave. First, let's understand what Bollinger Bands are. They consist of three main lines. The first one is called the middle band. This is the middle line, usually a 20-period simple moving average, which represents the midterm trend. And the next one we call the upper band and the lower band. These two bands are a certain distance from the middle simple moving average based on the market's volatility. The principle is very simple, based on two basic as below. The first one is band expansion. When the market has high volatility and the price moves quickly, the bands will widen like a broad road. And the next one is band contraction. When the market is sideways and the price has little volatility, the bands will narrow and like a narrow road. This is extremely important for scalper as we thrive on volatility. Bollinger Bands help us seize that volatility. That's the key to making smarter decisions. And now we will move to the next part and explore about these two applications for real-time trading. And the first application is the bottleneck trap and breakout strategy. This is one of the strongest signals of Bollinger Bands. When the market is sideways or consolidating, volatility decreases. At this time, the upper and lower bands contract, forming a shape like bottleneck or a compressed ring. The psychology behind it is this contraction shows that the buyers and sellers are in a stalemate. The market is in a state of balance. However, the state cannot last forever. It's like a compressed ring. The tighter it's compressed, the more force it will release. And now I will introduce with you the strategy for scalpers. When you see this bottleneck, get ready. Do not trade inside that zone. Instead, patiently wait for a powerful breakout. The price will often break out one of the bands and move quickly in that direction. And the tips for you here is to increase your win rate, wait for the breakout candle to close completely outside the Bollinger Band. This confirms that the momentum is strong enough and that it's not a false breakout. Then enter a trade in that direction. And the second application of this topic is Bollinger Band as dynamic support and resistance. The upper and lower bands don't just show volatility. They also act as dynamic support and resistance levels, which are especially useful for finding reversal entry points. And how it works? When the price touches the upper bands, it often indicates that the market is overbought and a correction might be coming. Conversely, when the price touches the lower band, it suggests that the market is oversold and might be bounced back. The strategy for scalpers in this situation is, let's wait for the price to touch the band. Be patient and wait for the price to touch either the upper or lower band. And the next step, you should look for confirmation signal. Don't enter immediately. The Bollinger Band is just a potential zone. Let's combine it with the price action signals we have learned. For example, when the price touches the upper band, let's look for a pin bar or a shooting star candle. And the last step is take action. When you have a confirmation signal, you can enter a trade in the reversal direction with a tight stop loss. And now I will give you some advanced advice and important notes relating to this topic. To use Bollinger Bands most effectively, remember the following. Not a standalone signal. Bollinger Bands are a great tool, but it's not a holy grail. Always combine them with multiple time frame analysis and other tools to increase reliability. The simple moving average 20 is a key level. In a strong trend, the price often tends to bounce off the simple moving average 20 after a correction. And the next advice is, let's customize settings. The default setting is usually 20. For scalping, you can experiment with lower setting, like 14, to make the indicator more responsive. And the last one is risk management. With a breakout strategy, your stop loss should be placed just on the other side of the consolidation zone. With a reversal strategy, the stop loss should be just outside the Bollinger Band. In conclusion, Bollinger Bands are not just an indicator, but a pair of eyes that help you see the market's true driver, volatility. By understanding how they work and applying the strategies we have just discussed, you will be able to trade much more strategically and confidently. Open your charts today, set up this indicator, and start looking for the stop-ups we just learned. I wish you success, happy trading, and see you in the next video.